I would never bet against the United States of America. If you're a woman, you live longer and you earn less. You've got to invest differently than a man does. We offer services for women from their first investing dollar through to tens of millions of dollars. I love to say we have no minimum and we have no maximum.
Sallie Krawcheck has made a career on Wall Street by going against the grain.
I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian.
It was her contrarian cause as a research analyst that put her on the cover of Fortune magazine, calling her the last honest analyst on Wall Street.
It changed my life. The picture was bigger than my actual face. It was the wildest thing.
Her bold cause also garnered the attention of Sandy Weil, who brought her over to Citigroup to turn around Smith Barney at age 38.
So he knew that I was a contrarian individual who wasn't scared to take tough stances.
Sallie climbed the ranks at Citi, serving as CFO and then CEO of its wealth management business. She was ousted in 2008 and landed at Merrill Lynch.
Ken Lewis, the CEO of Bank of America, called Sandy Weil, the former CEO of Citi, and said, Sallie turned around Smith Barney, can she do it at Merrill?
During her 2 years as its president, Sallie led Merrill to $3.1 billion in profits. She stepped down in 2011, unsure of her next step.
I had a big insight one day that women don't invest as much as men do. That, we all think it's because they're risk averse, but maybe it was because nobody built anything for them.
In 2016, she launched Ellevest, a financial advisory firm targeting female clients. Ellevest now has $2 billion in assets under management with some powerful backers, including Melody Hobson, Penny Pritzker, and Melinda Gates.
Everything, I think, gets better as women have more money.
So we're going to talk in a few moments about some of the positions you had on Wall Street, but they were some of the most senior positions you could have on Wall Street. Now you've started your own firm, which is smaller than running, let's say, all of the wealth of Merrill Lynch or something like that. So what is it like having hundreds and thousands of people reporting to you, and now you have a smaller group? Is it more fun or less fun, or how do you compare the two?
It's on some days it's much more fun, and some days, particularly in the early days of the company, it's much more terrifying. Because, we started Ellevest from scratch. With a startup in those early days, you can be one big mistake or two medium-sized mistakes away from, being out of business. So the days are definitely higher volatility. In terms of making the move, what's always been important to me is not really how many people report to me. For Ellevest, it really is impact. What are we trying to do, and are we impacting individuals, and specifically women? Our mission at Ellevest is to get more money in the hands of women through investing. And when you do that, you just, their lives just open up. They can live bigger lives as they accumulate wealth. They have less stress. They can do more for their families. They give more to nonprofits. And, I determined working at the big companies, it would have been hard, if not almost impossible, to change the cultures away from what they were to really focus on women. So it needed to be a startup to do it.
And do you have to be a woman to work there?
No, we love men.
Okay.
We love men. And in fact, it's not, I never, as we talk about diversity, it's not women are better than men, et cetera. The power of diversity is diversity, having diverse individuals. So I would say that whereas traditional Wall Street, in many of the functions, is sort of 85% men, we're about 85% women. 100% of our financial advisors and financial planners are women as well.
So you have said in other speeches that women are going to inherit enormous amounts of money in recent years because when their husbands pass away, which usually happens before the wife passes away, they're going to inherit money. Is that a new phenomenon, or is that just something that you've just focused on now? But is it something that's happening that's different about men giving money to women when they pass away, or what?
About 75% of women, 75 to 80% of women die single. And that's because half of marriages end in divorce, and that's because women live 6 to 8 years longer than men. And what we're staring at right now is, as you know, the boomer generation built and accumulated the most wealth in history. And as the boomers begin to hit their late 70s and their 80s, the gentlemen are beginning to pass away. And so we hear about the great wealth transfer. This money that they have is going to go, most folks say, to the millennials, to the Gen Zs. But first it goes to women. As a result of this, it's projected that women will receive tens of trillions of dollars of wealth over the next couple of decades. And in fact, there's some forecasts that show that women will therefore have the majority of wealth in this country over the next few decades. I love to say, that women's longevity is about to do the work that Lean In and the women's initiatives and Time's Up and the Women's March were not able to do, which is give women the majority of economic power in this country.
When women inherit money or they earn money, do they manage their money or want to manage their money differently than men? What's the difference between women and men in the way they manage their money?
They use their money differently for sure. Everything they do with their money is differently. So we could talk for hours about this because there's so many differences. Women tend to be more philanthropic than men. Women tend to believe in climate change more than men and donate towards it. Women tend to believe more in impact investing than men do, and so tend to be more interested in that. Women spend more on their families than men do. When women have more money, communities are stronger. We love to say at Ellevest, nothing bad happens when women have more money. So it's it's sort of a positive cascading effect. At the same time, what women don't do as much as men do is invest and build wealth. And in fact, when I was running Merrill Lynch and Smith Barney, what we saw is when he passes away or they get divorced, she leaves their joint financial advisor at a very high rate. The majority of women leave over the next year and often put the money in the bank. And so the negative of women getting money is that our research shows that most women say, I don't really know what to do with it or who can help me with it. And so they tend to husband it away in the bank as opposed to productively investing it.
So if a woman inherits a fair amount of money, or let's suppose she's an entrepreneur and she made a fair amount of money, and she comes to your firm, what do you do for her? Do you say you should asset allocate, you should do this and that? And what kind of rates of return are you trying to get for women or for any of your clients?
So it depends on where she is in her life and where she is on the wealth spectrum. And so we offer services for women from their first investing dollar through to tens of millions of dollars. I love to say we have no minimum and we have no maximum. So if it's a young woman, we have a digital offering that's the only one out there that takes gender into account, which, when investing, which doesn't matter as much if you're a gentleman, but if you're a woman, you live longer and you earn less. You've got to invest differently than a man does. We also found that women are really motivated by goals-based investing to buy a home, investing to start a business, investing to retire, not so much really energized by outperforming the market or buying this large cap stock. As women mature through their life, we offer financial planners who can help her with a comprehensive divorce package, for example, or a comprehensive inheritance package. And when she becomes wealthier, an accredited investor, we can offer her a real array of investments that invest for impact. Again, women tend to, even with this whole ESG pushback, women tend to really want to invest for a financial and an impact return. And so we've got the largest variety, the most eclectic variety of impact investments that really with a focus on investing in women, tailored to what women are looking to do.
Now, some investors say we're facing a presidential election and the world will be different depending on who wins. Do you think it really makes a difference who's president of the United States for rate of return you might be getting on your investments?
Well, there's all the research that shows that we think you do worse with a Democrat, but you do better with the Democrats. Certainly the president has an impact on the economy and has an impact on regulation and has an impact on the business environment. I would never bet against the United States of America and the businesses of it and the startups in it. And so I always have been bullish on this country regardless of who's in office.
There's a Fortune magazine cover story on you saying that you're the last honest person on Wall Street.
Yep.
So did that change your life?
It changed my life. The picture was bigger than my actual face.
Let's talk about your own background, how you came to this. So you were born in New Orleans, but you grew up in...
Very quickly went to Charleston. Very quickly. I'm a Charlestonian.
Okay, so you went to Charleston, and then you won a scholarship to go to University of North Carolina, a very famous scholarship, and you went there. Did you say, I want to be a woman on Wall Street when you went there?
No, I wanted to be a journalist. I ended up interviewing in the late 80s, both for newspapers as well as at Wall Street. And journalism paid $12,000 a year, and Salomon Brothers paid $31,000 a year, and Goldman Sachs paid $32,000 a year. And I said, I'm good enough in math to know that 31 is more than 12. Let me go to Wall Street.
So you went to Wall Street right out of college?
Right out of college.
And did you go to business school?
I went to business school a few years later at Columbia.
After you graduated from business school, what did you do?
Well, I tried to get back into journalism. I couldn't get a job, and I had to go back to Wall Street.
So where did you go?
I went to DLJ for 6 minutes.
All right, you went to DLJ, and then where did you go?
My first career move was I was fortunate enough to have the blinding insight that I love to say, as so many young women do in their late 20s, which is I wanted to be a sell-side equity research analyst.
And you went to a firm ultimately that is one of the leading ones in doing sell-side research, and that was Sanford Bernstein.
Yeah.
Then what happened is something that might have changed your life. There's a Fortune magazine cover story on you saying that you're the last honest person on Wall Street.
Yep.
So did that change your life when that came out? All of a sudden you're on the cover of a magazine, you're an analyst one day, and now you're seen as the famous last honest person on Wall Street?
It changed my life. The picture was bigger than my actual face. It was the wildest thing.
Did you know that cover story was going to say that about you?
No, I did not. But what got me there was, as a research analyst, and you may remember this, David, I'm just a natural contrarian. And I think it's, growing up, with 3 siblings, all close in age. If everybody was zigging, I was zagging. Believe me, I was zagging. And so at a time when in the late 90s, the internet bubble was, expanding, and it was just known that all research analysts had to be positive, and they had to be positive in part because they wanted to get the investment banking business that went along with the research business. And I looked at this and said, I'm actually not going to say anything as an analyst unless I have something to say, which means I'm going to be, I'm going to be contrarian, I'm going to be negative when others are positive. And as I became director of research when I was promoted, I said, I'm going to get us out of the investment banking business so that we can be the true independent research provider. So we'll be contrarian, we'll make big calls on big stocks, and we will not be conflicted. And we almost went out of business until the internet bubble burst. Everyone else was exposed for these conflicts, and our business did this.
So ultimately, after that article, somebody named Sandy Weil read that article, and he said, I need to have somebody run Smith Barney for me, something he'd owned when he was running Citicorp. So he called you up and say, I'd like you to be the head of Smith Barney?
Sort of. We knew each other. And we knew each other because I covered the industry he was in. I covered the banking industry. And I drove him nuts when I was a research analyst because, when he bought Salomon Brothers, everybody was positive, he was positive, and I was negative. And he called me up and he screamed at me. And he's later admitted I was right and he was wrong. So he knew that I was a contrarian individual who wasn't scared to take tough stances. And so when his research business, to which Smith Barney was attached, became caught up in the research scandal, he called me to come and turn it around.
So you get a job running Smith Barney.
Yeah.
All right. And did you like that?
I loved it.
And then ultimately you transitioned from Smith Barney to another part of Citi. Is that right?
I was CFO, Chief Financial Officer.
You're now Chief Financial Officer for the entire organization. So did you then say, wow, women really are rising up on Wall Street?
I said, I'm really rising up on Wall Street. And I think at the time I was naive. And I really thought, they just need to work harder, don't they? Look, I did it. So everyone else just shoulder to the grindstone and, get the work done, not really recognizing, some of the more nuanced challenges.
So you're the CFO of Citi, which is one of the biggest banks in the world at the time. And then you later get another job at Citi to be in charge of all wealth management.
Yeah.
So how many people are then reporting to you?
35,000 or something.
Okay, and you're doing that for a while. Sandy Weil leaves Citi, and ultimately somebody else comes in, and then I think, if I understand it correctly, you thought that maybe some of the investment calls that Citi had been making for its clients weren't so wonderful, and the clients didn't do as well, and you thought that there should be some makeup for them, and the Citi senior leadership didn't want to do that. Is that fair?
A little differently than that. You'll remember the subprime crisis. And we had, the company had missold products to individual investors that they thought were low risk, that would do well in a tough market, but they were high risk, as it turned out, and did very poorly. So it wasn't just calls were made badly, there were sort of fundamental mistakes and mis-selling that occurred. So I went to the new boss and said, I think we should partially reimburse clients. I think we're wrong here. I think we should do the right thing, and he did not agree. Now, I don't know if you remember this, but you gave me advice during the course of that time. weirdly, 2 days ago, on my computer popped up an old email in which I'm, sending the email to senior city folks saying, I talked to David, here's his advice, here's what he's thinking, and he gave me this advice, and for what it's worth, that's what David says. I don't know if you remember that.
I don't remember that, but was it good advice?
It was great advice, but I still lost my job.
Oh, sorry.
Yeah, well, I was gonna lose it anyway because I was so contrarian.
Well, I'm sorry you lost your job, but you then landed on your feet again because you became the head of another organization called Merrill Lynch. Is that right?
That's exactly
right.
right.
All right. So you're running Merrill Lynch, which is a big organization. How many people do you have now reporting to you?
Very focused on the number of people.
Well, it's a lot of people.
It's a lot of people. But the Merrill story, it was another turnaround. As you recall, Bank of America bought Merrill during the subprime crisis, and in those early days, financial advisors were hemorrhaging out. And as happens, Ken Lewis, the CEO of Bank of America, called Sandy Weil, the former CEO of Citi, and said, Sallie turned around Smith Barney, can she do it at Merrill? And they said, which you'll appreciate, yes, it will be like the University of Virginia basketball coach coming in to coach the University of North Carolina. So there'll be a little friction, but it won't be as if Duke came in and tried to take over, which would be terrible. And they brought me in to do it, and we got the business turned around.
So when you were thinking about starting Ellevest, how long did it take you to think about what you wanted to do? Where did the idea come from? Had you thought about it before? And was it hard to convince other people this was a good idea?
Yeah, all of it. So when I gave myself a few minutes to step back and I said, I'm out of big Wall Street, what comes next? David, I had any number of people who said, you should start an investing platform for women. And I have to tell you, I said, that is a really stupid idea. Women don't need their own thing, and that seems a little sexist and odd, and absolutely not. And a little junior varsity, too, because all the women's initiatives of the big Wall Street firms were, marketing at women, a little patronizing, not really getting to the core of the issue. So, no. And I had a big insight one day that women don't invest as much as men do, that, we all think it's because they're risk averse, but maybe it was because nobody built anything for them. So I went through this whole process that took a while of starting from a place of no to getting to a place of curiosity about a problem and are there solutions for the problem, and then thinking about building something to solve that problem.
So when you're raising money for your firm, do you go throughout the United States or do you go throughout the world? Where do you raise money for your firm?
Mostly the United States, and I'll tell you, we've had to do it differently. Sand Hill Road in Silicon Valley has never looked at Ellevest and said that, that is it. And quite frankly, if I'm honest with myself, they have not looked at me and said, boy, that is the hot shot entrepreneur that we've been waiting for, right? For a variety of reasons. And so, and I found what was very difficult to do was to go to people who invest for a living, and convince them of Ellevest's view of the world, that women are not being served for XYZ reason, that the great wealth transfer is coming. What I did instead was went to people who believed in our view of the world and convinced them to step out of their comfort zone and invest.
What's the best financial advice you've ever received?
Invest early, because if you invest early, even if you don't think it's that much, you get the compounding going. The other one is invest in women.
So in your Wall Street career, you've been a tough person. Sometimes you're willing to say to people they're wrong. Where did you get this element of toughness? Was it from your parents, from your college friends? Where did you get the idea of being tough and standing up to people who are disagreeing with you sometimes?
I've always been incredibly competitive. I just over the weekend heard a story about Caitlin Clark, that she, when the day that her brother learned to ride a bike, she took off our training wheels and rode the bike. I did the same thing with my brother. Very competitive. I'm not nearly as talented as she is, of course, but I'm certainly as competitive as she is. And I think it was growing up in, a small house with 6 people with 1 bathroom, where you just were throwing elbows, and you learned that you had to sort of be tough to get ahead. and that it also helped to be sort of contrarian.
To succeed in Wall Street,
Yeah.
what skills do you need? Do you need to be somebody that claws people on the back, people that you have to be tough, you have to be fighting people all the time? What are the skills that really take to succeed in Wall Street?
Great question. Of course you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out, which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings, they came in 2 cents ahead. One of the pennies was currency, the other penny was lower G&A, blah, blah. Forget it. Big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. But there'll be points in your life when you see, such as when I was at Sanford Bernstein and said we are in the, people are in a conflicted investment banking and research business, let's get out. Or at Ellevest, where the whole industry is really mostly focused, without knowing it, on serving men. Let's be the one that serves women. Every once in a while you have a big insight and you can build an entire business, in fact an entire industry around it.
Let me ask you about this. What's the best financial advice you've ever received? The best advice anybody's ever given you about money?
A couple of things. First of all, invest early, because if you invest early, even if you don't think it's that much, you get the compounding going. The other one is invest in women. So as an investor, I know you diversify any way you can, right? And you don't have just investments in the US, you have investments around the world. You don't just have stocks, you have bonds. You don't have high yield, you've got high grade. We diversify as investors in any way we can. One way we do not diversify is gender. So what we try to do at Ellevest with our investments that we make in private equities, private investments for women, is we try to have more women managers than men to even that out.
What's the biggest mistake that you think women or men make when they're investing?
It's different. For men, it's overtrading. For women, it's not investing. And we've been socialized as women. You know, my friend Rashma Sojani talks about boys are taught to be brave, girls are taught to be perfect. And so men will get in there and invest, and women are like, whoa, what's a basis point? What's a drawdown risk? What's a private equity? And they'll wait till they get an A, which they never do.
So what would you like your legacy to be 30 years from now or 40 years from now when you say, I'm not going to do this anymore? That you started Ellevest, that you were the last honest analyst on Wall Street, or you ran these big companies. What do you think your legacy should be?
What I'm doing right now is the most important thing I've ever done, by far. By far. And I know we talked, how many people reported to me, and how much responsibility did I have, and how big was my office. All that stuff is great. You're changing women's lives, and particularly young women's lives. It changes everything for them and for their families. And so, again, nothing bad happens when women have more money. What we're looking forward to is what I'm calling the feminization of wealth. That as women own the majority of wealth in this country, the ripple effect of everything that changes, the politics changes, gets kinder, more family-oriented policies, everything I think gets better as women have more money.